Okay, so in the earlier sessions, we had seen how banks play an important role in the economic development of a
Economic
country.
development of the country.
Okay, so
Yes, sir.
basically, we discussed about what is a fiscal policy, what is a monetary policy.
Yes, sir.
Okay, and what are the roles that the central bank, which is the Reserve Bank of India, is playing on the monetary policy front. Okay, one of the critical functions of the Reserve Bank is inflation targeting. Okay, so we discussed inflation
Yes,
briefly.
sir.
What are the types of inflation? Uh, the inflation which is caused by more demand, inflation which is caused by less supply. There is another inflation called cost push inflation. See that is something uh, which is which is not controlled by the monetary policy. So we have not discussed it, but for your own understanding, you can read what is cost push inflation. Okay, so inflation goes up if the input costs go
Cost
up.
post inflation.
Cost push, COST PUSH, cost
Ah,
push
okay,
inflation.
okay, okay, sir.
Okay,
Ah, okay, sir.
so inflation
Okay, sir.
also goes up when the cost of inputs go up. Okay, so that
Yes,
you
sir.
can read it separately because it can't be controlled by monetary policy. So we haven't discussed it here.
Sir.
Okay, but these
Yes,
are
sir.
ways in which inflation goes up. The one of the important roles of the RBI is to control inflation. So we discussed at what rate they have to control. Do you remember that?
Yes, sir.
What is the rate of inflation mandated by the government to RBI? It is 4 plus or 2 plus or minus 2. Okay.
Yes, sir.
So it is 4% plus or minus 2%. Right?
Yes, sir.
So the
Yes, sir.
inflation in the country
Yes, sir.
can vary between 2 and 6. Okay.
Yes, sir.
2% is the lower limit,
Yes, sir.
6% is the upper limit.
Yes, sir.
Okay, now the key is it should not go below 2 or it should not go above 6. Okay, but
Yes, sir.
see, there are certain deviations. Even in the last report, you might have seen that, in some of the reports, we would see that it is, six and a half,
Yes, sir.
6.25 and all that.
Yes,
Okay.
sir.
So
Yes, sir.
when the RBI tries to control, inflation through monetary policy, but there might be deviations here and there where we may not be able to control. If
Yes, sir.
the inflation is above the benchmark rates, then
Yes,
the
sir.
RBI gives a kind of reasoning to the government. It gives
Yes, sir.
a report explaining to the government what are the corrective steps they are taking to bring in the inflation at the targeted range
Yes, sir.
of 2 to 6%. Okay.
Okay. Okay,
So
sir.
there is a good interaction between the government and the RBI because
RBI.
fiscal policy and monetary policy have to go hand in hand.
Yes, sir.
Okay.
Yes,
Just
sir. Yes,
one
sir.
side working will not bring down the inflation or will not bring up the economic growth.
Okay, sir.
Fiscal policy as well as monetary policy have to work together. So
Yes, sir.
government and Reserve Bank works together to bring about economic development, control inflation.
Yes,
Okay.
sir. Yes, sir.
Okay. So how does the Reserve Bank control inflation? Okay. One
Okay,
is
sir.
when the government says, okay, you have to control inflation. But what are the tools the government has? The Reserve Bank has to control the inflation. Okay.
Yes,
Uh,
sir.
there are two types of tools, qualitative tools and quantitative tools. Okay.
Yes, sir. Yes, sir.
Quantitative tools are, open market operations. We will come to that. Bank
Yes,
rates,
sir. Yes,
CRR,
sir.
SLR. Then
Yes, sir.
liquidity adjustment facility, there are two types called repo rates and reverse repo rates.
Yes,
Okay.
sir. Yes, sir.
Qualitative credit control through publicity, through rationing of credit, adjusting margins of loans,
Yes, sir.
adjusting the rate of consumption loans, direct action, moral suasion. So moral
Yes, sir.
suasion is persuasion. Okay.
Yes, sir.
When we will come to it, but quantitative is more how they control the money supply.
Yes, sir.
Okay.
Yes, sir.
Qualitative is how they, the RBI can today say, like priority sector, you can lend so much. You need to lend so much to priority sector. They can say.
Yes, sir.
Then
Yes, sir. Yes, sir.
they can say so much of margins you have to maintain, because if a portfolio is risky, if a lending is risky, they can say
Yes,
so
sir.
much of margins you have to provide for in your balance sheet. Uh,
Yes, sir.
there are several ways in which the Reserve Bank controls the flow of money in the market through the
Yes,
bank.
sir.
Okay.
Yes, sir. Yes, sir.
What is the open market operation? Open market operation, when the RBI
RBI buys.
buys bonds from investors or sells bonds to investors
Yes,
on
sir.
on government securities. Okay, when the Reserve Bank buys bonds from from the market,
Yes, sir.
okay, there is more liquidity which is given to the market because the Reserve Bank pays the investors, right? Okay,
Yes, sir.
let's say I have a bond, you have a bond. Bond is, what is a bond? We discussed, no, there can be treasury bills, okay,
Treasury bills. Yes, sir.
which
Yes,
have
sir.
a fixed interest rate. These are instruments which have fixed interest
Fixed
rates
interest rate.
and a fixed maturity value.
Maturity period.
Okay,
Yes, sir. Yes,
and
sir.
bonds can be freely traded in the market.
Traded in the market. Yes,
Okay,
sir.
those are called bonds. Okay,
Yes,
see,
sir. Yes,
bonds are
sir.
different from fixed deposits. Okay,
Yes, sir.
fixed
Yes, sir.
deposits have the first two parts. Okay, they have fixed rates, fixed
Yes,
tenures,
sir.
but fixed
Yes, sir.
deposits
But
are not
bond.
freely traded in the market.
Yes, sir.
Okay, you get it. But bonds
Yeah.
are
Yes, sir.
freely traded in the market, right?
Yes, sir.
So
Yes, sir.
today, if the RBI wants to increase liquidity,
Yes, sir.
what do? They will buy bonds
Yes, sir.
from the market. When they buy
Yeah.
bonds, the RBI pays to the investors, right? Whoever is having the bond will get the payment,
Yes, sir.
right?
Yes, sir.
So
Yes,
when
sir.
they get the payment, the liquidity in the market shoots up.
Yes, sir.
Okay. Now, if the RBI wants to reduce liquidity in the market, what will they do? They will sell their bonds.
They sell their bonds.
When they sell the bonds, the investors
Yes,
will
sir.
buy bonds from Reserve Bank, right?
Yes, sir.
So
Yes, sir.
money from the investor will go to the RBI.
Yes, sir.
So the investor has reduced money.
Yes, sir.
When the money of the investors are reduced, the overall money in the market will get reduced,
Yes, sir.
right? So these kind of buying and selling of bonds by the Reserve Bank is called open market operations.
Okay, sir.
Through this, they will control the short-term interest rates and the long-term
Yes, sir.
interest rates, right?
Okay, sir. Yes, sir.
Okay. Next thing that the Reserve Bank does is interest rates. How the Reserve Bank controls interest rates is through CRR, SLR, open market operations. A lot of these activities that the Reserve Bank does
Yes, sir.
influences the market interest rates.
Yes, sir.
Okay, we will discuss it as we come to it, right?
Okay, okay, sir.
Reserve requirements, CRR, SLR.
Yes,
See,
sir. State liquidity. Yes, sir.
uh, banks today, let's say a bank has got 100 crores of deposit. Okay.
Yes, sir. Yes, sir.
What is the reserve requirement is there are two reserves that the bank has to maintain. Okay.
Yes, sir.
Bank cannot lend all the money they have collected
Okay,
from
sir.
the depositors. You must understand this concept.
Okay,
Okay.
sir.
In the earlier sessions, we discussed from one customer, a bank has collected 1 lakh.
1
They
lakh
have
and
given
distributing
50,000 to two customers.
two customers.
Okay.
Yes, sir.
So, but that example does not work out in practical sense because when banks collect 100 rupees from a depositor,
Yes,
they
sir.
cannot lend the entire amount.
Okay, sir.
They have to maintain statutorily certain reserves. There are two such reserves which they have to maintain, which is called CRR and SLR.
Okay, sir.
Okay, so today SLR and CRR itself adds to about 22-23%.
Okay, okay, sir.
So mandatorily, a bank has to maintain 22 to 23% of its deposits
Yes, sir.
as reserves without lending it to customers.
Yes, sir.
Okay, now
Yes, sir.
this 22-23%, I am saying no.
Yes, sir.
Those levels are fixed by the Reserve Bank.
Okay, sir.
Okay, so
Okay,
we
sir.
have seen two types of monetary policies. One is contractionary monetary policy. The other is expansionary monetary policy.
Monetary policy.
Okay, so the Reserve Bank, if they are following contractionary monetary policy,
Yes, sir.
they will increase CRR SLR.
Okay, sir.
If they want, which means the money that can be lent by the bank will get reduced. So let
Yes,
us
sir.
assume today CRR plus SLR is 22, 23%. Okay.
Yes, sir.
Tomorrow
Yes, sir.
Reserve Bank says CRR plus SLR should add up to 30%.
Okay, sir.
Okay. So from 100 rupees, the bank was lending 76 rupees today.
Yes, sir.
When they make it 30%, the bank can lend only 70 rupees.
70 rupees.
Correct? You get it, no?
Yes, sir. Yes, sir.
So the reserve that the bank has to maintain goes up, and
Yes, sir.
accordingly, the limit of lending of the
Yes,
bank
sir.
goes down.
Okay, sir.
So when the lending goes down, it results in tighter money supply
Yes, sir.
and it results in a contractionary monetary policy.
Yes, sir.
Now, but as we discussed earlier, when in a contractionary policy environment, the economic growth slows down.
Yes, sir.
Okay, after some time, the Reserve Bank says, yes, now we should expand the lending, and they shift back to expansionary monetary policy. In an
Yes.
expansionary monetary policy, the CRR and SLR rates are reduced, resulting in more funds which are available with the banks for lending out to customers.
Yes, sir.
Right? This is how, when more funds are available, what happens to interest rates?
Interest rate will decrease.
When more funds are available, correct, interest rates
Yes,
will
sir.
decrease.
Yes, sir.
When less funds are available, interest rates will go up.
Go ups.
Right? So this
Yes, sir.
is how CRR, SLR, interest rates are all interconnected.
Okay, okay, sir.
Okay. Now we will discuss more in detail.
Okay, sir.
Currently, CRR is 4%, not 6.5 that you said.
Okay, sir.
Okay. Currently, it
Okay,
is
sir.
4% of what? So you can read this slide. Can you read the slide?
The
First slide.
CR, the current reserve ratio fixed by RBI currently
Current
is
reserve ratio,
4%.
it is cash reserve ratio.
Cash reserve ratio
Hmm.
fixed by RBI currently is 4% of NDTL.
Now, what is this NDTL? 4% of NDTL. NDTL means net demand time liabilities.
Yes, sir.
Very important concept that a banker has to understand. Net demand time
Time
liabilities.
liability.
Okay, what is NDTL means?
Yes, sir.
First, let's understand demand and time liabilities. You understand, right? So we have discussed two types of deposits. One is demand deposits. The other is time deposits.
Yes, sir.
What is a demand deposit?
Demand deposit can be converted. அது எப்போ வேணாலும் நம்ம கேஷா மாத்திக்கலாம்ன்ற மாதிரி சார்.
Mathikala. So that is typically savings account, current account, correct? Huh?
Current account. Yes, sir.
Right. Now, what is a
Yes, sir.
time deposit?
It has a certain time
Hmm.
to withdraw.
Correct.
Time period.
It has a maturity time.
Yes, sir.
It has a maturity tenure. Correct.
Tenure. Okay, okay,
It
sir.
matures only on tenure, and the customer can withdraw that only on fulfillment of the tenure.
Yes, sir.
Correct.
Yes,
So
sir.
those are called time deposits, right?
Yes, sir.
So DTL, demand and time liabilities. This much you can understand, correct?
Okay, okay, sir.
Okay, why do they call it net demand and time liabilities?
Net.
Net means, okay, you have to
Yes, sir.
remove interbank deposits.
Okay, sir.
Okay, so for example, banks can have deposits among themselves, right?
Yes, sir.
See, today, let's say Equitas Bank has excess cash. Okay, they
Yes,
will
sir.
not use it for the next 7 days.
Yes, sir.
They can keep it as a deposit in some other bank, either for clearing purpose or for any other kind of operations. They can maintain deposits in other banks, right?
Yes, sir. Yes, sir.
So interbank deposit has to be removed from this.
Okay, sir.
Okay, let's say your bank has 100 crores of deposits, of which 5 crores belongs to Equitas Bank.
Yes, sir.
Okay, so when you are calculating NDTL, your actual deposit base is only 95 crores, not 100 crores. You have to remove that 5 crores of Equitas in your bank.
Okay, sir.
That will give you NDTL.
Okay, sir.
எதுக்குன்னா ஈக்விட்டாஸ் ஏற்கனவே சிஆர்ஆர் வச்சிருப்பாங்கல்ல. See, you must
Yes, sir.
understand, then it will become a double counting.
Yes, sir. Yes, sir.
They already are maintaining CRR and CRR SLR. They come to you with a deposit. Again, you will count that for CRR SLR. Again, you will make it. So it will become a double counting. So
Yes, sir.
you have to, for NDTL, you have to remove interbank deposits from your books.
Yes, sir.
Simple. You must understand this. Okay.
Yes, sir.
So instead of 100 crores, once you remove the 5 crores of Equitas, you have to
Yes, sir.
calculate 4 crores from the 95 crores only.
Yes, sir.
Okay, so if it is 100 crores, you will have to maintain CRR of 4 crores.
For
But when you are NDTL, when you are doing NDTL and you are removing interbank deposits,
5
then
crores.
you have to maintain only for
95,
how much?
95 crores.
Uh, 4 crores பா அதுல 95 crores-க்கு 4%னா எவ்வளவு வருது?
4%.
ஆ,
Yes, sir.
so 3.8 crores only will come.
3.8 crores.
So the you will have 20 lakhs more to lend.
Yes, sir.
So it is advantageous for the bank. Okay.
Yes, sir. Yes, sir. Yes,
So
sir.
this is how CRR is calculated.
Yes, sir.
Right. When
Yes,
CRR, as we discussed, when CRR is higher, the amount of money the bank can lend goes down. Right.
yes, sir.
And the interest rate will go up.
Yes, sir.
Demand deposits consist of all liabilities which the bank needs to pay on demand, like current deposit, demand drafts, balances in overdue fixed deposits, savings
Yes, sir.
bank deposits, etc. Time
Yes, sir.
deposits are deposits that need to be paid on maturity. Right?
Yes, sir.
Liabilities of a bank include call money market borrowings, certificates of deposits, and investments in other banks.
Other banks.
Right?
Yes,
So,
sir.
in short, higher CRR, lesser is the amount of money available to banks for lending and investing. So, this is the important point.
Yes, sir.
Right? So, higher CRR will result in lower lending of money by the banks.
Yes, sir.
It squeezes money flow in the economy, reducing investments and bringing down inflation.
Yes, sir.
Now, let's move to SLR. SLR currently is what? 18%.
18%.
Okay.
Yes, sir.
SLR is the minimum percentage that banks have to maintain in the form of treasury bonds. These are in the form of gold, treasury bills, and government approved securities.
Yes,
Okay.
sir. Yes, sir.
Now, these are two different concepts that we are talking.
Yes,
When
sir.
we are discussing, we are saying today it is 22 to 23% total.
Yes, sir. Yes,
Okay.
sir.
But there is a major difference between CRR and SLR. Why it is told as two different concepts? Why the Reserve Bank can simply say a single ratio of 23% you can have. That's all over.
Yes, sir. Yes,
Why do
sir.
we have two? Okay, we will come to it. Okay, there are
Okay. Okay,
differences
sir.
between CRR and SLR.
Okay, sir.
Okay, we must understand those differences also.
Yes, sir.
Okay, for that you must understand that SLR is maintained in the form of liquid assets like gold, treasury bills, government bonds,
Government bonds.
which can be immediately or quickly converted into cash.
Yes.
Okay,
Yes,
which
sir.
can be quickly converted into cash.
Yes.
The the SLR also is maintained as a percentage of NDTL, net
Yes,
demand
sir.
and time liabilities, right?
Yes, sir. Yes, sir.
So CRR is calculated at 4% of NDTL. SLR is calculated as 18% of NDTL.
In detail.
Okay.
Yes, sir.
So today it is about 22 to 23%. Okay.
Okay, sir.
The
Okay.
CRR and the SLR can go up to 40%.
Yes, sir.
RBI has the authority to
Yes, sir.
move SLR up to 40%.
Yes,
Okay.
sir.
So that is as per the regulation, but just for knowledge, you must know that in very difficult situations, the
Yes,
RBI
sir.
can even move SLR to about 40%,
Okay, sir.
right?
Yes, sir. Sir.
Okay, now let's understand the difference between CRR and SLR.
Yes, sir.
Okay,
Yes, sir.
SLR, as I said, are liquid assets which include cash, government securities, and gold. Okay,
Yes, sir.
CRR are the cash deposits or reserves which are maintained with the RBI. Okay,
Yes,
so
sir.
please understand where the money is. Okay, CRR
Okay, sir.
is a deposit which the banks make with RBI.
Yes, sir.
Okay, you have
Yes,
to
sir.
deposit that money into RBI. Only then it is counted as CRR.
Yes, sir.
Whereas SLR, you have to buy government securities or you can buy gold or you can have treasury bills, right?
Yes, sir. Yes, sir.
You have to buy it and show proof to the government, to the RBI, that is all. Okay, the instrument is different.
Yes, sir.
Okay.
Yes, sir.
And the next important thing, bank earns returns on money parked as SLR. So when the
Yes,
bank
sir.
buys government bills or treasury bonds, treasury bills or government bonds, they get an
Yes,
interest
sir.
rate. They get an interest, right?
Yes, sir.
But when the bank deposits money in Reserve Bank as CRR,
Yes, sir.
banks do not have any return. 0%, 0% interest.
Yes, sir.
No interest is paid.
Yes, sir.
Okay, now please understand this major two differences.
Yes, sir.
Okay, banks will not earn any interest out of CRR. Banks will earn interest out of SLR.
Yes, sir.
Right? Very, very
Yes,
big
sir.
difference.
Yes,
Because
sir.
it will impact the profitability of the bank.
Yes, sir.
See, let us assume today 4% of, let's say, a bank like HDFC
Yes,
or
sir.
ICICI.
Yes, sir.
Okay, they will have 100,000 crores, 200,000 crores deposits.
Yes, sir.
100 crores-க்கு 4 crores மெயின்டைன் பண்ணணும்னா 100
Yes, sir.
1 lakh crores-க்கு எவ்வளவு மெயின்டைன் பண்ணுவீங்க? 4,000 crores மெயின்டைன் பண்ணுவீங்க.
4,000 crores. Yes, sir.
4,000 crores if you are maintaining at 0% interest, what happens to your profit?
Yes, sir.
Right? But
Yes,
you
sir.
are paying the depositor
Yes, sir.
even for that 4,000 crores, correct? You are
Yes,
paying
sir.
the depositor for the whole
Depository.
amount.
Yes, sir. Yes, sir.
Please understand this.
Yes, sir.
Okay. Second thing, you have to maintain SLR 18%. Okay. These can
Yes, sir.
be bought as government securities, treasury bills, gold, and all that. Okay.
Yes, sir. Yes, sir.
Returns here are also quite low.
Yes, sir.
It will not be market returns. இந்த அமௌண்ட்டை நீங்க லெண்டிங் பண்ணீங்கன்னா நீங்க
Yes,
வந்து
sir.
12%க்கு லெண்டிங் பண்ணுவீங்க. ஓகே.
Yes, sir. Yes, sir.
ஆனால் கவர்மெண்ட் செக்யூரிட்டிஸ் ட்ரெஷரி பில்ஸ் உங்களுக்கு இன்ட்ரெஸ்ட் ரேட் வந்து 6% 7% இருக்கும்.
Yes, sir.
அப்படின்னால் இந்த சிஆர்ஆர் எஸ்எல்ஆர் ஹையரா இருக்கும்போது பேங்க் உடைய ப்ராஃபிட்டபிலிட்டி கம்மியாயிடும்.
கம்மியாயிரும்.
Please understand this.
Yes, sir.
CRR SLR will have a direct bearing on bank profitability just because it has to be maintained as a deposit.
Yes, sir.
But it is very, very important for the banks to maintain CRR SLR because otherwise the entire amount will be lent to customers,
Yes,
which
sir.
will result in very high risk. Even if one or two large customers default, the
Yes,
bank
sir.
will collapse.
Yes, sir.
So you must understand this. By mistake, I think you made a line.
Yes, sir. Yes, sir.
See, you must understand this. It is a safety net for the banks.
Yes,
Okay.
sir.
Very important purpose that is being served by CRR SLR is to maintain liquidity of the banks.
Yes, sir.
Tomorrow, if there is a large customer which defaults, without CRR SLR, the entire bank will collapse.
Yes, sir.
So it is important for the banks to mandatorily maintain CRR SLR.
SLR.
Then
Yes, sir.
CRR SLR are tools on monetary policy by the Reserve Bank to control inflation and money flow. Right? Very, very important that we must understand CRR and SLR when you want to be a banker or you want to be in the financial sector. SLR is used to control banks' leverage for credit expansion. It ensures solvency of banks. That is what I said just now. It ensures solvency of banks means the banks, even if certain large customers default, they already have about 22 or 23% of their deposits as CRR and SLR, and
Yes, sir.
thereby the whole bank will not collapse. It acts
Yes,
as
sir.
a safety net for the bank,
Yes, sir.
right?
Yes, sir. Yes, sir.
Okay. Now we will go on to repo rate. Repo rate
Okay,
is
sir.
6%.
Yes, sir.
Reverse repo rate is 3.35. Now please understand this. What is repo? What is reverse repo?
Yes,
Right?
sir.
Repo
Yes, sir.
means the money. You're asking?
Yes, sir.
Repo.
Yes, sir.
Repo means the rate at which banks borrow money from Reserve Bank to during a cash crunch. Okay, so earlier in our discussions, we said
Yes, sir.
that banks can borrow money in the call money market, right?
Yes, sir.
We discussed
Yes,
there
sir.
is a call money market between banks. They can, they can buy and
Exchange
they
the
can
money.
buy and they can,
Yes, sir.
buy, right?
Yes, sir.
Uh, 1 minute. Yeah.
Okay.
Banks can also borrow money from the Reserve Bank.
Yes, sir.
Okay.
Yes,
When
sir.
banks for their short-term liquidity crunch or for their short-term liquidity requirements.
Yes,
See,
sir.
liquidity requirements are not only cash crunches. Liquidity requirement can also be, requirement of money for lending.
Yes,
Okay.
sir.
So banks can borrow money from the Reserve Bank, and Reserve Bank gives to the bank at 6%. This you must understand. That is called repo rate.
Yes,
Okay.
sir.
Repo
Yes,
means
sir.
repurchase option.
Yes, sir.
The short term repurchase option is the actual term.
Yes, sir.
Abbreviated term is repo.
Okay, sir.
Okay.
Yes, sir.
You must understand repo is against collateral. Okay. For
Yes,
example,
sir.
when you go and borrow funds from the bank,
Yes,
the
sir.
bank will say, என்ன collateral கொடுப்பீங்க? Will you give me a land? Will you give me gold jewels? Will you give me, fixed deposit as collateral? Something they will ask you, right? They won't give you
Yes,
money
sir.
just like that. Correct?
Yes, sir. Yes, sir.
Similarly, when banks go to the Reserve Bank and borrow money from the Reserve Bank asks collaterals from the bank.
Yes, sir.
These collaterals can be treasury bills
Yes, sir.
or certain, bills that are sanctioned by the RBI.
Yes, sir.
So repo rate is the rate at which Reserve Bank lends to banks with collateral,
Yes, sir.
right? So banks have to provide collateral for availing of loans at the repo rate from RBI.
Yes, sir.
Okay. So
Okay, okay.
RBI accepts collaterals in the form of gold, treasury bills, bonds, etc.
Yes, sir.
Okay.
Yes, sir.
Banks borrow money from RBI to maintain liquidity or
Your
cash
cash
reserve
reserve.
as a precautionary measure.
Yes, sir.
Repo rate is a mechanism to observe the liquidity in the market, thus restricting borrowing power of investors.
Yes, sir.
Reverse repo rate is when Reserve Bank borrows from the banks
Excess liquidity in the
to
market.
take back the excess liquidity in the market. The Reserve Bank borrows money from banks, and that is called reverse repo,
Reverse for it.
right?
Yes, sir.
This typically happens, reverse repo typically happens when inflation is very high and RBI
Yes, sir.
wants to control money flow,
Yes, sir. Yes, sir.
right?
Yes, sir.
Okay. There are two terms here we have seen, bank rate and repo rate. Okay.
Yes, sir.
Bank rate is a long term lending by RBI to banks.
Yes, sir.
Okay, banks can take money from the Reserve Bank for a long-term basis also, but that lending happens at bank rate. Repo rate is for short-term lending overnight to a few days.
Yes, sir.
In bank rate, no collateral is required, whereas in repo rate requires collateral, which is
Requires
government
collateral.
securities.
Yes, sir.
The purpose of bank rate funding is for long-term funding. Repo rate, as we have seen, is short-term liquidity.
Yes, sir.
Bank rate indirectly impacts long-term interest rates. Repo rate directly impacts short-term interest rates. So if the
Yes, sir.
repo rate is high, the interest rate will be high.
Yes, sir.
Okay, bank rate is Reserve Bank lending to banks for capital needs. Repo
Yes, sir.
rate is for Reserve Bank lending to banks for short-term liquidity needs.
Yes, sir.
Okay, now, so these are the quantitative tools. The quantitative tools we have seen are what? Open market operations, CRR,
Yes,
SLR,
sir.
repo rate, reverse repo rates.
Yes, sir. For it.
Okay, now
Yes,
coming
sir.
to the qualitative tools of monetary policy.
Yes, sir.
So when the Reserve Bank feels that 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 certain sectors are overheating, or there are certain ways in which the money flow has to be controlled, they also do customer credit regulation.
Yes, sir.
Okay, credit is regulated to certain sectors. Okay,
Yes,
by
sir.
certain tools like margin requirements. Okay. Now, for
Yes, sir.
example, let us say you want a home loan. Okay. When you want to purchase a nice property. Okay. You go to a bank for a loan. Will the bank give 100% of the property value, or how much loan will they give?
Part of the property, sir.
Huh?
Basis. On the basis of the property.
On the basis of the property, how much will they give? Let us say you are going to buy a property of 1 crore. Okay. So,
Maximum 60 lakhs.
no, maximum home loan, they will give 80%. Okay.
Okay,
They
sir.
will give 80%, bank will give. The remaining
Yes, sir.
20% you have to bring in, correct?
Yes, sir. Yes, sir.
What you have to bring in is called a margin.
Yes, sir.
Okay.
Okay,
Now,
sir.
let us say that the Reserve Bank wants to uh, control flow of money into this housing sector because prices have gone up and that sector has become risky. Okay. So this 20% margin that you have to bring, the Reserve Bank can tomorrow say for all home loans, customers have to bring in 25%.
Yes, sir.
Banks can lend maximum 75% only, not 80%.
Yes, sir.
Immediately, what will happen? The flow of money into that sector will go down.
Yes, sir.
Okay. So the
Yes,
risk
sir.
will be reduced. See, real estate பொறுத்த வரைக்கும் என்னன்னா, the more money as it flows into the sector, the prices
Yes,
will
sir.
go up
Yes,
and
sir.
the risk in that sector will slightly go up. Okay, you must understand that.
Yes, sir.
So RBI can change that margin requirement and say for home loans, from now on, customers have to bring 25% margin. Banks
Yes,
can
sir.
fund only 75%.
Yes, sir.
So bank exposure to that sector will go down. Correct? So this is
Yes, sir.
called a qualitative tool banks, through which the Reserve Bank controls flow of funds into certain sectors.
Retail sector.
Okay, so similarly,
Okay, sir.
the Reserve Bank has restrictions for microfinance sector, for personal loan sector. So they have got lot of restrictions.
Yes, sir.
Now let's move on to consumer credit regulation. So consumer
Yes, sir.
durables. If there is excess demand for consumer durables leading to their high prices, RBI reduces the
Consumer credit.
credit, right?
Yes, sir.
By asking for increased down payment,
Yes,
adjusting
sir.
risk weights for the loans. Okay, so this is a very important tool that the RBI has. Risk weight is an internal weight the bank has to maintain. Okay, let us
Yeah.
say today there is a bank. which
Yes,
has
sir.
which has 100 crores given as consumer durable loans. Okay.
Yes, sir.
Now the market has become very risky. There are a lot of defaults. Okay.
Yes, sir.
So for every 100 crores that has been given as loan, the RBI can say that you have to maintain 100% margin, or you have to maintain, the bank has to internally provide
Yes, sir.
100% of the amount as risk weights in their balance sheets.
Yes, sir.
When they increase the risk weights, the available money for the bank to lend to that particular sector will go down.
Yes, sir.
Now, for example, unsecured lending category. Okay.
Yes,
RBI
sir.
tighten norms around this portfolio. Unsecured lending na enadhu? Do you understand it? Unsecured lending is personal loan. See, for
Yes, sir.
example, home loan. Home loan, when you buy a home loan,
Yes, sir.
okay, you are giving that property as a collateral. Okay.
Yes, sir.
Now imagine you are taking a personal loan,
Yes,
you
sir.
don't give any collateral, or a credit
Yes,
card,
sir.
for example. Credit
Yes,
card
sir.
or personal loan, there is no collateral.
Yes, sir. Yes, sir.
Okay, so bank is giving you 1 lakh or 2 lakhs without collateral.
Yes, sir.
Imagine that sector becomes very risky. There is higher default rate.
Yes, sir.
For this, to tackle this problem, RBI directed consumer credit exposure for banks and NBFCs will attract a risk weight of 125% compared to 100% earlier.
Yes, sir.
So the risk weight of these loans has gone up. When the risk weight of these loans go up, banks have to maintain that kind of extra money in their balance sheets,
Yes, sir.
and they will not be able to lend to that sector again, to that sector to that extent.
Yes, sir. Yes, sir.
They will have to reduce the lending to that extent.
Yes, sir.
Recently, microfinance sector, the risk weight has gone from 75 to 125%.
Yes, sir.
So the lending to microfinance sector has reduced,
Yes, sir.
right? So one is margin requirement, the other is adjusting the risk weights of the loans.
Yes, sir.
Then direct action, RBI can, take direct action such as refusing to rediscount bills of charging penal interest rates when a bank does not cooperate with the central bank in achieving desirable objectives. Banks have to cooperate with the central bank, otherwise there will be certain issues,
Certain effects.
right? Rationing
Yes,
of
sir.
credit or credit ceiling. Banks
Yes, sir.
can, RBI fixes a ceiling on the amount of loans that can be granted by scheduled commercial banks. As a result, scheduled
Yes,
commercial
sir.
banks tighten in advancing loans to the customers.
Yeah.
Then priority sector. Banks can say that instead of 40%, tomorrow you have to give 50% to priority sector.
Yes, sir. Yes, sir.
So general lending will go down. Okay,
Yes,
so
sir.
these are some of the qualitative tools. Okay.
Yes,
Now,
sir.
another important concept that you must understand is, monetary policy transmission. Okay.
Yes, sir. Yes, sir.
See, these things you would have seen: repo rate, Reserve Bank increases or decreases. Okay.
Yes,
Let
sir.
us assume repo rate is decreased by the Reserve Bank.
Yes, sir.
When the repo rate is decreased by the Reserve Bank, what will happen to the interest rates?
Interest rate will increases.
No, no, no. Repo rate is decreased.
Decrease, na, interest rate decreases.
Interest rate decreases. Okay.
Decreases. Yes,
Now,
sir.
let us say we have taken housing loan from a bank. Okay, let us assume.
Yes, sir. Yes,
Okay. So RBI reduced interest rate, let's say last week. Okay.
yes, sir. Yes, sir.
Next week, one customer comes to the bank and says, RBI has reduced interest rate. Now you reduce my home loan. Home loan interest rate reduce பண்ணுங்க அப்படின்னு ஒரு கஸ்டமர் வந்து கேட்கிறார்.
Yes, sir.
Well, the bank says it will take some more time.
Yes, sir.
Okay.
Yes, sir.
Now, the time taken between the action by the RBI
Yes, sir.
and the result on the interest rate is called monetary policy transmission.
Yes, sir.
See, immediate குறையாது எதுவும்.
Yes, sir.
Okay, next day வந்து ஒரு customer வந்து they can't ask that now RBI has reduced repo rate, now you reduce the interest rate on my loan. It will not
Yes,
happen.
sir.
There is a
Yeah.
something called transmission which happens. Okay, now this is the cycle.
Yes, sir.
Short term nominal interest rate becomes long term interest rate,
Yes, sir.
long term real interest rates,
Yes,
spending
sir.
investments and spending on investments and durable goods, real GDP, then the
Yes, sir.
response starts. Okay.
Yes, sir. Yes, sir.
It takes a period of time when the action taken by the Reserve Bank results in a response on the interest rate. Action ஒரு
Yes, sir.
டைம்ல எடுத்தால் response will take some time
Time.
and it will take transmission to happen.
Yes, sir.
Right? As the repo
Yes, sir.
rate brings changes in market interest rate, the
Yes, sir.
repo rate channel is often referred to as the interest rate channel of monetary policy transmission. It will take time.
Yes, sir.
When an action is taken by the RBI, the response will take time. That is called monetary policy transmission.
Yes, sir.
For it to reflect in the financial markets and ultimately affect the businesses and households.
Yes, sir.
The
Yes, sir.
effect for businesses and households will come after a period of time.
Yes, sir.
So let us say sometimes it takes 2 months, sometimes it takes 3 months, right?
Yeah,
So
sir. Yeah, sir.
it will take a bit of time for the policy to come into effect, which is called monetary policy transmission, right?
Yes, sir.
Now we saw what is the we saw in the earlier slide different types of interest rate,
Different
nominal
types of
interest
interest
rate,
rates.
long-term interest rate, real interest rate, and all. Okay.
Yes, sir. Yes, sir.
So there is a difference between nominal interest rate and real interest rate.
Real interest
Okay.
rate.
Nominal rate is the agreed rate. Okay.
Yes, sir.
Real interest rate is inflation adjusted.
Yes, sir.
Real interest rate equals to nominal interest rate minus inflation rate.
Yes, sir.
Okay. Now please understand this is very, very important. Okay. When you are investing.
Yes, sir.
Because you as a banker, you will have to guide your customers towards investments and all that. Okay.
Yes, sir.
Now
Yes, sir.
imagine a depositor, a saver deposits 1,000 rupees in an account for 1 year,
Yes, sir.
interest rate of 2.5%. Okay. So they will
Yes, sir.
get 1,025 in a year's time. Okay.
Yes, sir. Yes, sir.
1000 ரூபா போடுறாரு 2.5% இன்ட்ரெஸ்ட் ரேட்டு அவருக்கு வந்து ஒரு
Yes,
வருஷம்
sir.
கழிச்சு 1025 ரூபா கிடைக்குது.
Yes, sir.
Okay, now if inflation is 3%,
Yes, sir.
okay,
Yes, sir.
the price of goods have increased by 3%. Okay,
Yes.
so what you can buy last year at 1,000 rupees today has become 1,030.
Yes, sir.
But the interest you got is only 1,025,
Yes, sir.
which means the real return of the customer is minus 0.5.
Yes, sir.
So 3% minus, sorry, it is nominal interest rate, 2.5% minus 3%, that is minus 0.5.
Yes, sir.
So you must always understand that the interest rate has to be, we have to always look at what is the real interest rate.
Yes, sir.
Okay. For example, today's inflation is about 4.5%, whatever. Okay.
Yes, sir. Yes, sir.
Assuming it is, example, it is 4.5%. Okay.
Yes, sir. Yes, sir.
Tomorrow you join a bank, that bank gives an interest rate of 7%.
Yes, sir.
Okay.
Yes, sir.
7% is the nominal interest rate for a fixed deposit.
Yes, sir.
Okay. Inflation rate is 4 or 4.5%. Okay.
மாட்டிருங்க மாட்டிருங்க
Hey, Dinesh, mute your thing, yeah. Mute. So, customer,
சார் சார்
mute your phone. I'm hearing
எஸ் சார்
voices.
எஸ் சார்
Ah.
எஸ் சார் எஸ் சார்
So, the real interest rate has to be adjusted to inflation. So, nominal interest rate for the fixed deposit is how much? 7%.
எஸ்
Whereas
சார்
inflation is 4.5%. So, how much has the customer got as real interest rate? 2.5%.
2.5%.
Okay. Now,
எஸ் சார்
for investments and all, the real interest rate is what is calculated. Is
Yes, sir.
what needs to be calculated.
Yes,
Okay.
sir. Yes, sir.
Customers need to be aware of real interest rates.
Yes,
Okay.
sir.
When the inflation, that is why when inflation goes up, the nominal rate also will go up.
Yes, sir.
Okay. For example, when inflation is high, the bank FD rate will be 8%, 9%.
Yes, sir.
Right.
Yes, sir.
So nominal interest rate also follows inflation.
Yes, sir.
When inflation is high, nominal interest rate will also be high. Please understand this concept.
Yes, sir.
Right.
Yes, sir.
Okay. What is the contribution of banking to the GDP? Banking sector is a major contributor to GDP. Outstanding loans from commercial banks were 45% of India's GDP.
Yes, sir.
Okay, please understand.
Yes,
Loans
sir.
are
Outstanding.
huge, and we contribute to the GDP by giving loans to businesses, to households, and all that. Okay.
Yes, sir. Yes, sir.
Bank deposits accounted for 72% of India's GDP.
Yes, sir.
Retail loans 14.3% of India's GDP.
Yes, sir.
The BFSI industry, that is banking financial services industry,
Yes, sir.
has is expected to contribute to 20% of the GDP by 2030 from the
Yes, sir.
current level of 12%. So we are contributing 12% of the country's GDP
Yes,
currently,
sir.
which will
Yes, sir.
go up to 20% by 2030. In this, the banking industry only contributes 7.7% of GDP.
Yes, sir.
So, so it is it is a majorly important industry. Okay, banking industry or BFSI industry is
Yes, sir.
very important towards economic development, towards inflation control, towards interest rates, towards
Yes,
monetary
sir.
policy. We
Yes,
play
sir.
a huge role. Okay, that
Yes,
is the
sir.
importance of a banker.
Yes, sir.
A banker is so important to the country in these ways. Okay.
Yes, sir. Yes, sir.
Now, so that concludes the role of banks in economic development. Okay.
Yes, sir.
Because we couldn't conduct yesterday, we will quickly move to the next topic. Okay.
Yes, sir. Yes, sir.
Okay. Now let's look at the regulatory framework.
Yes, sir.
Just a bit of history about the Reserve Bank, set up in 1934. Okay.
Yes,
As per
sir.
the Reserve Bank of India Act, and it was basis the Hilton Young Commission. Okay.
Yes, sir. Yes, sir.
So when the British were governing India at that time, the RBI was set up. Initially established in Calcutta, okay,
Yes,
but
sir.
moved to Mumbai, which was earlier Bombay. Now it is currently Mumbai. It had moved in
Sir.
1937. Okay.
Yes, sir.
Currency offices of the RBI, where all they were handling.
Yes, sir.
Calcutta, Bombay, Madras, Rangoon. Where is
Arango.
Rangoon?
Yes, sir.
Where is Rangoon?
Burma. Burma.
Burma. Okay.
Yes,
Karachi,
sir.
Lahore, all Pakistan. Okay.
Yes, sir. Yes, sir.
And Kanpur became
Sir.
branches of the issue department. So earlier, the whole pre-partition India, it was handled by the RBI.
Yes, sir.
Burma, Myanmar seceded from the Indian Union 1937. So 1937, Burma separated,
Yes,
but
sir.
still the Central Bank of Burma was handled by the RBI till 1947.
Yes, sir.
RBI was handling as the Central Bank of Pakistan up to June 1948.
Yes, sir.
From 1949, RBI has been fully owned by the government of India. Okay.
Yes, sir.
So
Yes,
this is
sir.
a brief history of Reserve Bank.
Yes, sir.
We must be, being in this industry, we must know a bit of history, and we must be proud of it, right?
Yes,
So
sir.
you
Yes,
can
sir.
see how we have developed.
Yes, sir.
So there are RBI has 5 training establishments also, which is just 1 minute, 1 minute.
Okay, sir.
So there are 5 training establishments: RBI Academy, College of Agricultural Banking, RBI Staff College, College
Yes,
of
sir.
Supervisors,
Yes, sir.
RBI IDRBT, that is Technology in Banking. So this
Yes,
RBI
sir.
Staff College is here in Chennai only.
Yes, sir.
If you have the time, you can go and take a look.
Okay, sir.
Okay, so what are all the departments of RBI? Issue department. Issue
Banking
department is
department.
currency issue department. Okay,
Yes, sir.
they issue currencies. Then banking department, Department of Banking Development. So there are 16,
Department of. Yes, sir.
departments. Okay,
Yes,
inspection
sir. Yes, sir.
department.
Yes, sir.
You can just go through that. RBI
Okay,
Services
sir.
Board. RBI Services Board does the recruitments for RBI. Okay.
Okay, sir.
Functions of the Reserve Bank of India.
Issue of bank
Issue
notes.
of bank notes.
That is money.
That is currency notes.
Yes,
Okay.
sir.
But
Yes, sir.
read only notes. Okay,
Yes, sir.
notes. Apna என்ன அர்த்தம்? What about coins?
Yes, sir. Coins RBI supply பண்றாங்க.
RBI சப்ளை பண்ணாது. அதனால தான்
Yes,
அது
sir.
நோட்ஸ்னு போட்டிருக்காங்க.
Yes, sir.
Coins are printed by Government of India, not by RBI.
RBI.
Please understand, coins are
Okay, sir.
printed by the government, okay, not by
Okay, sir.
Reserve Bank.
RBI, Reserve Bank.
Okay.
Yes, sir.
Currency notes issued by the RBI are acceptable throughout the country. Why you need to have a uniform currency note? It brings uniformity in notes issue
Yes, sir.
for effective supervision, easier to control and regulate credit
Yes,
in
sir.
accordance with the requirements of the economy. It keeps faith of the public in paper currency. So before paper currency, what was there? What used to be currency?
Before paper, copper coins.
Copper coins. Even before coins, what? There was a
Coins.
barter system. முன்னாடி வந்து
Yes,
இப்படி
sir. Yes, sir.
bartering தான் பண்ணுவாங்க.
Bartering, barter.
ஒரு
Yes, sir.
பொருளுக்கு இன்னொரு பொருள் கொடுப்பாங்க.
இன்னொரு பொருள் கொடுப்பாங்க.
ஒரு பொருள் வாங்கினா இன்னொரு பொருள். ஸோ
Yes, sir.
ரைஸ் வந்து ஒரு ஒரு 10 பேக் ரைஸ் வேணும்னா 5 பேக் வீட் கொடுப்பாங்க. இல்லை
வீட்டுக்கு
வாட் எவர்
கொடுக்கணும்.
இட் இஸ். ஜஸ்ட் அன்
Yes, sir.
எக்ஸாம்பிள் ஐ எம் சேயிங்.
Yes, sir.
Or
Yes, sir.
10 bags of wheat for 10 bags of rice அந்த மாதிரி
Yes,
whatever.
sir. Yes, sir.
They will exchange goods and commodities.
Goods and goods.
Goods to goods or goods to
Yes, sir.
commodities, whatever.
Yes, sir.
Okay.
Yes, sir.
Then only currency came. Okay, because you can't keep exchanging goods for goods, right?
Yes, sir.
So they brought in currency.
Yes,
So
sir.
the second important role of RBI, it is banker to the government. It maintains all the government's accounts.
Yes, sir.
It also represents Government of India as member of the IMF and World Bank. You know what is IMF and World Bank? International
IMF,
Monetary Fund,
Monetary
World
Fund.
Bank.
Yes, sir.
Okay, so what you have to do is today's your assignment is you have to read about IMF and World Bank
Yes, sir.
and talk about it and talk about it for 5 minutes tomorrow. You have to tell me about
Okay.
it.
Okay, sir.
Okay, because it is
Okay,
very
sir.
important. These are international financial institutions.
Yes, sir.
Okay,
Yes, sir.
you must understand how it was formed. The other 1 minute. Okay, you can go
Okay,
through
sir.
that. You
Yes,
can
sir.
tell me about it, and
Yes, sir.
then you have to say how they lend to governments and what
Yes,
impact
sir.
they have on fiscal policy or monetary policy, and
Yes,
what
sir.
impact they have on countries. Okay,
Yes,
you
sir.
need to read it. You have to explain to me tomorrow.
Yes, sir. Yes,
Okay.
sir. Yes, sir.
Then RBI acts as custodians of cash reserves of commercial banks. So CRR we
Yes, sir.
maintain, right? Banks will maintain.
Yes, sir.
So RBI acts as the custodian of CRR.
Yes, sir.
Custodian of country's foreign currency reserves. Very, very important.
Yes,
We
sir.
maintain, see, government releases, no, we have, $300 billion. as foreign currency. We have
Yes, sir.
$500 billion as foreign currency. Where is
Yes,
it
yes.
maintained? Who maintains it? RBI maintains it,
RBI maintain.
right? Lender of last resort. So if there is an emergency, if a bank is in trouble, liquidity is a problem, then banks will go and borrow from Reserve Bank. So Reserve Bank ensures financial stability by ensuring banks do not collapse. They have
Yes,
sufficient liquidity. Okay. Central
yes, sir.
clearance and account settlement. Hello? Dinesh, you asked something?
No, sir. No, sir.
Okay. Central clearance and account settlement. So all the clearing happens through RBI, right? Check
Yes, sir.
clearing. All the clearing systems happen through RBI, interbank clearing, right? So RBI is called the banker to banks. Controller of credit. So we just discussed RBI determines money supply, and hence it acts as the controller
Yes,
of
sir.
credit, and credit is controlled by RBI in accordance with the economic priorities of the government.
Yes, sir.
Regulator and supervisor of the financial system. So,
Yes,
as we
sir.
discussed initially, we said the RBI will strictly monitor the performance of banks, whether they are
Yes, sir.
following all rules and regulations. There should be no
Yes, sir.
deviations, right?
Yes, sir.
Licensing authority to banks, right?
Yes, sir.
So,
Yes, sir.
all banks will have to obtain license from Reserve Bank to
Yes, sir.
function as either as a bank or an NBFC. All banks and
Yes, sir.
NBFCs will get license
Yes, sir.
from Reserve Bank of India.
Yes, sir.
Formulates banking policy. We have discussed this in interest of public and depositors. The RBI finalize the RBI gives
Yes, sir.
guidelines on KYC, account opening,
Yes, sir.
advances, margins.
Yes, sir.
Everything is controlled by RBI. Okay.
Yes, sir. Yes, sir.
Developmental role. So
Yes, sir.
depositor awareness
Customer
and education.
Reserve Bank
Then
of
a
India has.
lot of this fraud education, all that Reserve Bank does, right? You would have seen a lot of advertisements by RBI.
Yes,
You
sir.
should not believe in such messages. All
Yes, sir.
those are
Yes, sir.
developmental activities which are done by RBI.
Yes, sir.
RBI also conducts economic research and provides inputs for policy making and
Yes, sir.
economic indicators.
Yes, sir. Yes, sir.
Consumer protection, very, very important. The RBI Ombudsman scheme, if there is a dispute between a customer and a bank,
Yes, sir.
the customer can go to the ombudsman, right? There is
Yes, sir.
something called an ombudsman scheme.
Yes, sir.
The customer can go and appeal to RBI, and
Yes,
RBI
sir.
will help to settle the matter.
Yes, sir.
Handling complaints through CP Grams portal. Okay.
Yes, sir.
Appellate authority. So if a customer is unhappy with the bank, they can go and appeal with the RBI. So RBI is
Yes,
an
sir.
appellate authority.
Yes, sir.
Grievance redressal mechanism, liaising
Yes,
with
sir.
banks, Indian Banks Association,
Okay.
RBOs, regulatory departments, Department of Financial Supervision,
Yes, sir.
everything are the functions of the government.
Yes,
Okay.
sir.
So
Yes, sir.
in our country, everything has to work by rules. Okay.
Yes,
So
sir.
what are the acts which have formalized Reserve Bank? The Reserve Bank of India Act of 1934, Banking
Yes, sir.
Regulation Act of 1949. Very, very important acts. Okay.
Yes, sir.
But
Yes,
since
sir.
your course is a shorter term, we will not get into detail with these acts. But
Yes,
in
sir.
our longer course, we discuss this. Okay.
Yes, sir. Yes, sir.
RBI course, RBI Act, Banking Regulation Act are very, very important. It determines the functioning of banks. What all functions can a bank do? What a bank should do? What a bank should not do? Everything is determined by the rule of law. These are rules which are
Yes, sir.
available. But when you have free time, you can read it. Okay, Banking
Okay,
Regulation
okay,
Act.
sir.
Huh?
Okay, sir.
உங்களுக்கு ஃப்ரீ டைம் இருக்கும்போது யூ கேன் ரீட் இட் ஓகே பிஆர் ஆக்ட்
Yes,
இஸ்
sir.
வெரி வெரி வாஸ்ட் பட் வெரி இன்ட்ரெஸ்டிங் டு ரீட் வெரி 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 நைஸ் டாபிக் ஃபார் யூ டு அண்டர்ஸ்டாண்ட் ரைட்
Yes, sir.
தென் ஆக்ட்ஸ் கவர்னிங் ஸ்பெசிபிக் இன்ஸ்டிடியூஷன்ஸ் பப்ளிக் டெட் ஆக்ட் கவர்மெண்ட் கவர்ன்ஸ் கவர்மெண்ட் டெட் மார்க்கெட்
Yes, sir.
செக்யூரிட்டிஸ் கான்ட்ராக்ட் ரெகுலேஷன் ஆக்ட் 1956 regulates government securities market. Indian Coinage Act governs currency and coins. So in the act
Yes, sir.
வந்து they will say that RBI will not print coins. The
Yes,
government
sir.
of India will print coins.
Yes,
Okay.
sir.
இப்போ
Yes, sir.
லைக் ஜென்ரல் பப்ளிக் ஃபார் எக்ஸாம்பிள் நிறைய ஷாப்ஸுக்கு நம்ம போகும்போது சொல்லுவாங்க சேஞ்சே இல்லை சேஞ்ச் இல்லை அப்படின்னு
Yes, sir.
Some people will say RBI ல இருந்து print பண்ண மாட்டேன்றாங்க காயின்ஸ் அப்படின்ட்டு. Actually,
ஆமா
as a
சார்.
banker, you must be aware that coins are printed by the government.
By in the government of India.
Foreign Exchange Regulatory Act 1973, FEMA Act 1999, it governs trade and forex.
Yes, sir.
Companies Act 1956, it governs banking companies.
Yes,
Okay,
sir.
banks are companies which have to adhere to the Companies Act of 1956.
Yes, sir.
Acquisition and Transfer of Undertakings 1970-80, which
Yes, sir.
relates to nationalization of banks.
Yes,
Okay,
sir.
so before 1965, 70 and all, there
Yes,
used to
sir.
be a lot of private banks,
Yes,
okay,
sir.
which were all nationalized by the government around that
Yes,
time.
sir. Yes, sir. Yes, sir.
So for that, they have framed rules and regulations. That is called
Yes, sir.
nationalization of banks.
Yes, sir.
Bankers Books of Evidence Act and Banking Secrecy Act, very, very important.
Yes, sir.
Okay. Negotiable Instruments Act 1881, which
Yes,
governs
sir.
all the negotiable instruments like checks, DDs, everything.
Everything.
Again, legacy, but very, very important for us to be knowledgeable.
Yes, sir.
All these acts you must know. When you have free time, please go, because we don't cover these in our course
Okay,
right
okay, sir.
now because
Okay,
of the
sir.
short-term course.
Okay,
You
sir.
will have to take the interest in reading these.
Yes,
Okay.
sir. Yes, sir.
Then acts governing individual institutions, State Bank of India Act 1954.
Yes,
As I
54.
said, while State Bank is a public sector bank, it is
Yes,
not.
sir.
It comes under a separate act. All the other public sector banks comes under separate acts,
Yes,
right?
sir.
IDBI Act, IFC Act 1993, NABARD
Yes,
Act,
sir.
National Housing Bank Act, DICGC
Deposit
Act,
insurance and the
Depositor
credit.
Insurance and Credit Guarantee Corporation
Yes,
Act.
sir. Yes, sir.
Okay, so these are the important rules and laws which pertain to the regulator and the
Yes, sir.
regulation for the banking system.
Yes,
Okay.
sir. Yes, sir.
Fine. So we'll close today.
Yes,
Okay.
sir.
So,
Yes,
and
sir.
we will continue tomorrow. Okay.
Yes, sir.
But I want you to read about IMF and World Bank and
Yes,
speak
sir.
about it tomorrow. Okay.
Yes, sir. Yes, sir.
Okay. Thank you.
Okay, okay. Thank you, sir.
Bye.